What's up everyone, it's Scotty with Money Investing. In this video we are going to be talking about one stock, one company that is going to be reporting earnings next week, which I do believe is trading at or below its fair value at the moment, considering the quality of the fundamentals, and of course the stock price has just been selling off. It's been literally in the doghouse, and of course the market has been punishing this company for quite some time. If you haven't guessed already, it is going to be PayPal, ticker symbol PYPL. As always, if you enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month. And of course, the option scores, we've got a brand new option score that's available for a 50% discount until the end of this month. So both of these expire at the end of this month. So if you want to take advantage of it, now is the time. And the coupon code is going to be launch for the option scores, and of course the annual discount for Discord is already going to be available, and then you can use that at checkout as well. So links are going to be down below if you're interested in joining us. The company that we are again talking about is PayPal. They are going to be reporting earnings pre-market, which is quite surprising. They usually do report post-market, and the expected EPS is going to be $1.16. I just want to check that this is indeed pre-market because that doesn't sound right. But let's take a quick look. So earnings, so right now on TradingView it does say post-market, so after the markets close. I don't know why on Seeking Alpha it says pre-market, but I'm pretty sure they're going to report after the markets close. And EPS expectations are $1.15, revenue just over $7.27 billion, so that's going to be that number. And like I said, EPS is just over $1.16, but most likely it's going to be post-market after the markets close. When it comes to upwards and downward revision, it's been kind of more, leaned towards downward revision. So 19 downward revisions over the last 3 months versus 10 upward revisions here. But the company has just been growing. Regardless of the market environment, regardless of the economic environment, the company has always figured out a way to grow. That's incredible, right? That's absolutely phenomenal. And I've always scratched my head around PayPal's stock price selling off so much, even though the fundamentals continue to look absolutely beautiful, which we'll talk about in just a minute. But if you take a look at transactions, 5.8 billion transactions in the last quarter. This is first quarter 2023, and that's a 13% increase on a year-over-year basis. This is one of my favorite metrics, transaction per active account, TPA, 53.1, which is also up 13% year-over-year. We'll take a look at this particular chart and how this has grown over the last couple of quarters here, several quarters actually. And total payment volume was up to 355 billion, up 10 to 12% year-over-year. We've got revenue at just over 7 billion, up 8.6% year-over-year. Free cash flow was the only thing that was significantly, it was slightly down. I should say significantly, it was slightly down 3% year over year, and $5.1 billion free cash flow trailing 12-month basis. So very significant amount of cash flow there, which we did the analysis. The free cash flow yield for the company right now based on the market cap is well over 7 to 8%. Non-GAAP EPS $1.17, up 33% on a year-over-year basis, and non-GAAP operating income up 19% year-over-year to $1.6 billion. So everything kind of moving in the right direction. Everything has been moving in the right direction as you compare it from 2015 to 2022. This right here has been the CAGR for the last 5 years for the company, which is something that we can also potentially use for kind of estimating what the next 5 years might look like for PayPal, right? So non-GAAP EPS was 17% growth. And guess what? The next 5 years and 9 years, the growth rate for PayPal is also 17%, a little bit over 17% in terms of their bottom line profitability. Total payment volume, again, $355 billion here for the company, 10 to 12% growth year over year, and mostly being driven by, of course, PayPal, Venmo, Zoom increased 2% to 91 billion, representing 26% of total payment volume. This is something that I mentioned earlier, transaction per active account, so TPA. And look at how well the engagement has grown over the last 6 quarters for the company, from 45.4 transactions to over 53.1 transactions, even though active accounts have gone up, but not by a significant amount, right? So they've gone from 426 to 433 million. Obviously, we did see a little bit of a decline quarter over quarter in the last quarter. That was one of the reasons why obviously the stock price sold off even further, when it did. So revenue, obviously a little bit over 7 billion, 9 to 10% growth year over year. This is their guidance for the entire year. They're expecting free cash flow well over $5, non-GAAP EPS of just a little bit under $5, and non-GAAP EPS growth of over 20%. So that is a growth stock, right? It's a growth stock trading as a value company. And the best thing that PayPal can actually do in their earnings call next week is come up with a plan for the management restructuring that we're going to see. And if by any means they're able to raise their guidance even by a little bit, man, oh man, is the stock price going to see absolute one of the best days in a very long time. Because last couple quarters, and in fact the pretty much the entirety of that year, we have seen PayPal obviously get destroyed. Earnings after earnings, it's been selling off pretty significantly from its all-time highs of well over $308. It is still down over 76%. It's actually one of the underperformers year to date. It's very flat. It hasn't really moved much. It's not higher or lower, barely up on the year. But of course, it can and has the opportunity to turn things around here if, of course, the earnings come in strong. We get a beat, revenue, EPS, and of course, more importantly, the guidance. If the guidance comes in strong with a good management structuring in place, of course, we're going to learn more about who the next CEO is going to be and who's going to be the one to replace Dan Schulman after the end of this year. That's, again, very, very important questions that investors have, and that's really what's going to dictate the stock price. Now, finally, I want to go over, let's say $73 is where it's at right now, $74. If you do a very simple calculation of $4.95, right? So $4.95 divided by $74, that's an earnings yield of just under 6.7%. And if you do 5 billion divided by the actual market cap for the stock, which is 82.5 billion, if you do 5 divided by 82, we're looking at a free cash flow yield of just over 6%. So you've got a stock right now that's providing you with a free cash flow yield of over 6% and an earnings yield of just under 6.5%. Those are some pretty strong numbers if you ask me. And of course, going over to the second quarter guidance, 7.5 to 3% or 7.5 to 8% growth in revenue. Non-GAAP EPS growth, look at that. Just look at that. Non-GAAP EPS growth expected at 24 to 26% year over year, and non-GAAP EPS between $1.15 and $1.17 per share. Like it's I have no words. I literally have no words. When the fundamental of a company looks so strong and the stock price continues to sell off, just take a look at these bar graphs, right? Consistency is PayPal's second name. It should really be PayPal Consistency Holdings. That's literally like no joke. That's what it should be like every single year. They've been able to grow revenues. They've been able to grow gross profit, operating income moving in the right direction. Everything's moved in the right direction for the company over the last several years. Now, valuation, of course, 16.5, 14.5 times earnings. Price of sales trading at a little bit under 3. Price of cash flow just a little bit under 14, under 13. Enterprise value to EBITDA trading at about 10 to 15 times at the moment. And the balance sheet's pretty good too. We've got pretty good current ratio and a little bit more than debt than cash, and slightly something that I wouldn't necessarily want to see. But again, it's not the end of the world. The company's got almost as much as cash as the debt on the balance sheet. And of course, this right here is going to be the earnings expectations in terms of growth. 494 to 1083 to 2128 over the next 5 to 10 years. And we're looking at a CAGR of about 17% with consistent share buybacks of less than 1% for the company over the next 5 years. So if you plug those numbers in, this is what I'm plugging in. 16% growth, which is lower than the last 5 years and lower than the consensus estimates. 16 times P multiple, which again is a pretty low multiple to begin with in my opinion. 12% discount rate, 10% margin of safety, and minus 1% in their share dilution, meaning that they are going to be buying back shares every single year for the next 5 years by 1%. This is my fair value, just $73, and right now it's trading at 74. 73.96 is where it's at right now, to be precise. 73.98. So very, very close to the fair value. And this again is going to be that sensitivity grid. You can take a look, different price to earnings multiple, different growth rates, and where that fair value might end up, how that might change. You can see that for yourself. But like I said, if you do get a beat on EPS, if you do get a beat on revenue next week, and some good guidance, maybe even raising that guidance, that alone is going to be enough for the stock price, in my opinion at least, to break past $74, $75 and maybe even make its way higher to $78. That's going to be that next resistance in line inside this highs and higher lows inside this uptrend. So this right here is going to be that resistance kind of in line with that 300 simple moving average, all the way up to as much as 88, close to $90 per share. That's going to be that next target for PayPal moving forward. So hope you guys enjoyed this video, found it helpful, and a complete update on PayPal stock. Let me know your thoughts down in the comment section below. What are you doing with this company? Are you buying, selling, holding? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Don't forget 16% annual discount and a 50% discount on the option scores coupon code LAUNCH Both of these do expire at the end of this month, so you do have only 2 more days to take advantage of these deals. As always, happy investing. I'll see you all in the next video.